Hi, this is James Full Capital, and I've got Chris here with Multifamily Group to go through a new deal. Appreciate you jumping on and going through this deal. So, Chris, maybe give people a little bit of your background and a little bit about the firm.
Yeah, so unifying characteristic of everything that we work on, it's all workforce housing. For the most part, I focus on San Antonio and Houston for TMG. We don't touch anything that's LIHTC. Again, for the most part, just conventional workforce housing. We do tertiary, but my primary focus is Houston and San Antonio. I know those markets very well.
All right, so we got a new deal here, 75 units out in Sealy, Texas. So tell us where Sealy sits in the Houston Metroplex.
Just west of Houston, about 10, 15 minutes away from Katy, which is where the majority of the growth has really been situated as far as kind of Houston sprawl. Drive time to Houston, 40, 45 minutes. And again, Katy is right there, probably about 15 minutes away.
Yeah, I mean, my aunt lived out in the Woodlands and people used to say, where's the Woodlands? And that's like about an hour north of Houston downtown. And then you've sort of had these sort of rings in Houston. So whether it's Beltway 8 or 99 sort of come and sort of cross. So we haven't quite got there. So you're really using I-10 as your corridor to get east-west. And then, eventually they'll probably build another ring out here. But talk about Sealy sort of demand drivers out there in terms of employment and some of the housing stock out there.
Yeah, I think for the most part, Sealy itself is still a single family market. For the most part, our employment drivers are going to be situated in Katy. But again, you're about 15 minutes away. And when we look at the rent comps, there's a couple $100 in disparity as far as, hey, I want to be situated in Katy versus Sealy. So in talking with management, it's been interesting. They've told us that there's a decent subset of their tenants that actually work. And these are, high paid GC folks that work in San Antonio some days of the week, and will spend the remainder of the week in either Houston or in Katy. So this is strategically positioned on 10, which gets you from San Antonio to Houston.
All right. Yeah. My parents live in Houston and sometimes they go to San Antonio for the day. And I'm like, how do you do that drive? But I guess people are used to it. And, in terms of demand drivers, I mean, I think this one's a little bit more unique in terms of age as well. So talk about sort of age of the property, the developer, anything that you can give us in terms of background on the property.
Yeah, so it's a first-time multifamily developer. His background is not doing apartment development. His first foray into this realm, but he has done an incredible job with this product. And it's a 2021 construction. They initiated lease up late in 2021. They're at 85% right now. Management is confident that we're going to be close to 90 or low 90s by the time we get to a signed LOI. So we're not concerned about lease up. There's been no concessions offered as far as getting these units leased, which is really common with new products. And I think that speaks to the demand.
And then in terms of amenities, so it's 75 units total. I see a pool on here. Any other amenities sort of at this property, or is it pretty specific just to a pool? And I see some maybe some storage.
They've got a small pool out front, and then they've got a gym as well. And then there is a dedicated leasing office, and the leasing office is huge. And they've also allowed tenants to lease that out for parties and any kind of events that they want to use that leasing office for.
And it's third-party managed now?
Yes, it's third-party managed by Stagecoach right now, which is a local management company in Houston.
Okay. I mean, I guess we'll run through just some of the property, specifics here. So everything's individual, everything's copper, everything's new, washer dryer connections. And then, so how do they manage it? So you've got maybe one manager and maybe some part-time maintenance?
So one dedicated manager that's out there full-time, and she handles leasing and general operations. And as far as maintenance is concerned, obviously maintenance is relatively minimal with this being a new build, but they do have rotating maintenance techs from Houston that will go out there on an as needed basis. Again, that the management company is based in Houston, so they'll have folks go out there on an as needed basis.
And then are they billing back pretty much for everything, or you think there's some additional things they could be billing back for?
So on the utility side, they're billing back for everything, but we see an opportunity with 40 storage lockers that are integrated within the property, and they're not currently charging for those. We also see an opportunity with this being Houston. We all know the summers down there are brutal. We see an opportunity to do covered parking. But as far as utilities are concerned, they're billing back for everything.
All right, so maybe add some carports
Yeah.
on the property, maybe lease out some of the storage units that are already in place. Okay. And then maybe even doing some package locker. So they already have the package locker room, or you're thinking
that's an
add
opportunity
that?
that we saw. And we've got some bids for that folks can check out.
So this is just their mail room. This is not that you might have to.
Yeah, that's just, okay. Straight up. Yep. Mail room.
Okay. So maybe spend 20,000 on package locker, maybe 90,000 on carports, and then start leasing those out. And then maybe talk about the comps and sort of what you're seeing in Sealy and then surrounding areas. Yeah.
So one deal point that I shared with James earlier that we're excited about is Retreat at Sealy, which is a 200 unit new build. They're still in lease up. So the principal on that is actually the principal at one of the largest appraisal firms in Houston. And when you're looking at comps, it helps to know that your principal down the street, less than a block away, that developer is literally the president of one of the largest appraisal firms in Houston. I think that's a market confidence in the market. But there's been a ton of development activity. Sealy's blowing up. I think it's really going to be a beneficiary of Katie's growth. And Houston, it's growing east, but not really. It's primarily growing west through Katie. And I-10 is again getting increasingly dense. And we see this being a really strong market moving forward.
Is I-10 10 lanes on each side over there in Sealy? Like not it is?
Not quite yet. In a few years, I think it will be. Let's see.
Yeah, I think I saw a picture of like I-10 closer to Houston, and it was like literally 10 lanes on each side. Like it's just amazing how it just keeps getting wider and wider. And so yeah, I mean, I think eventually Katie used to be on the outskirts, and now that's just sort of main to main for sort of West Houston. And so yeah, I mean, rents right now are about $1,100. You think you can take them up closer to maybe 1,300 on average in comparison to these comps? And then we looked at some comps in Katy, and their average rent is probably closer to 1,500 on sort of your new stuff, $1,600 on new stuff in Katy. So there's going to be a discount. I mean, you're going to have a little bit of a discount to Katy, and so that's just for this particular deal. So the first year, I mean, obviously you're in lease up right now, so you're not going to really have much of an NOI to speak of. So maybe talk through the pro forma on where you think this deal can go.
Yeah, I mean, our pro forma is a mid-5 cap, and we were pretty conservative. I think one point that a lot of potential buyers have been running up on is the fact that they're comparing this to Harris County when it comes to reassessment. And this is Austin County, which is a huge benefit. Harris County deals are getting slammed. We're having to underwrite, call it 85% of purchase price. And luckily, we're not in Harris County here. So you have that Harris County growth. You have Houston right there. You're in direct proximity to Houston. You're in direct proximity to Katy. But you have the benefit of having we'll call it a friendlier appraisal district and a friendlier assessor where they're not necessarily getting to 85% of purchase price. So I think that's one of the largest items that people need to take into consideration when we're looking at this pro forma. But as far as our OM right now, this is dated. We should have a fresh T12 here that's going to have March occupancy reflected. Right now, we're about 85% economic occupancy. So this is going to start to tick up. But yeah, we're looking at about a mid to high 5 cap with our pro forma.
All right. So Whisper on this deal, 75 units is right in what range on the Whisper again?
Yeah, so looking for 13 million, which is about 173 per unit.
Okay, 173 a door. Okay. All right. So, I mean, obviously it's in lease up, so it's going to be a bridge loan. I think on this one, just because of the size, there's really two ways to look at it. You could go with sort of your standard non-recourse bridge. You're probably, 375 to 4 at the 70% leverage. And interestingly enough, we're seeing some guys go even lower leverage bridge. So they might even go to 60% or 55%, and you can get that maybe SOFR plus 200. So if you have 1031 money, you have $5 million to maybe put down, and you want to just do a $7 million loan. We've seen some people do that. On the bank side, I think you're going to have very similar terms, but it'll be fixed rate. So we're still seeing fixed rate 425, 4.5 on bank. And, that might be a 5-year fix. You might get 1 to 2 years of IO and then 25-year AM after that with a step down prepay. So if you're willing to sign recourse, I think a lot of people are going to choose the bank route just to get the fixed rate. You don't have to buy an interest rate cap. And then, you have a step down prepayment. So I think those are really, the 2 or 3 options out there for buyers right now. And it seems like, I think everybody would love for this deal to be like 200 units. And, I think, but for lenders and everybody, I think this size is still a good size. It's near quality stuff. So I think there'll be plenty of lenders to bid it on this deal. So Chris, have you guys set a call for offers date yet on this deal?
Yeah, so our CFO is planned for May 2nd. And just to keep management's eye on the ball, so to speak, we are doing batch tours. So our first batch tour is going to be next Monday, the 11th of April at 10 a.m. And we do have 2 more planned after that, prior to that call for offers. We've gotten a ton of interest on this deal, which is great. We're excited about that. But because they run lean, it's a smaller deal. We are trying to encourage folks to get out there during one of those batch tours just to make sure that we're going to get this deal to call it the low 90s economic occupancy by the time that we get to a signed LOI.
Yes.
For financing sake.
Yes, for financing sake. Yeah, it definitely makes it easier when the seller keeps the collections up, and we don't see a huge dip in occupancy or collections between contract and closing. So we appreciate that. So Chris, I guess wrap us up with any final sort of closing comments on this deal, and we'll take it from there.
Yeah, I think proximity to Katy, it's a 2021 construction. There's no delinquency. We don't have to worry about the CapEx. It's free and clear financing. I think with today's market conditions and how hairy the C-class world has gotten, and the fact that yield has gotten so low, I don't know why you wouldn't look at a 5.5 cap new build when you can be in Dallas looking at a 3.75 cap. It's a 60s vintage construction where 100% of the units have had $10,000 poured into them, right? Ultimately, we're excited about the opportunity. We've gotten a ton of interest already. I think it's a great yield opportunity in a high growth corridor. And we're excited about the listing. We're excited to chat with potential candidates about it. And we know that y'all will do a phenomenal job of getting folks, great financing on it.
All right. Well, I appreciate you coming on, Chris, to share the story. And we'll have people reach out to you and get out there on one of those tours in the next couple of weeks before call for offers. So thanks a lot for coming on.
Absolutely. Thanks, James. We appreciate it.
All right. Thanks.
Bye-bye.